Let's take our seats and we can get started. We gave folks a couple extra minutes because there's like a marathon walk to get here, right? We all got our morning exercise. So let me welcome you all here today, distinguished guests, esteemed speakers, ladies and gentlemen, and a warm welcome to the lovely but a little rainy city of Milan, and to our seminar on cross-border payment rails from infrastructure rollout to a smooth customer journey. This is hosted by the Banca d'Italia and the BIS Committee on Payments and Market Infrastructures, or CPMI. My name is Tara Rice, and I'm the head of the CPMI Secretariat, honored to be your master of ceremony today. To open today's session, it is my great pleasure to invite to the stage President of the Asian Development Bank for his opening remarks. Please join me in welcoming Mr. Masanto Kanda. Thank you.
Very kind. Good morning, Governor Padeta, distinguished colleagues and friends. It is my honor to join you here today. I'm grateful for the warm hospitality I and ADB have received here in Italy during our annual meetings. I'm quite sure you agree that innovation is critical to enhance cross-border payments. This will improve efficiency and drive economic growth, financial stability, and inclusion across Asia and Pacific. Efficient, secure, and accessible payment and settlement systems are foundation for strong economies. They lead to lower costs, faster speeds, and greater transparency, and improved financial access. Governor Padeta, I very much appreciate what the Italian G7 presidency in 2024 has done to support this initiative under the strong leadership of Bank of Italy. Asia has made significant progress in modernizing its payment and settlement systems. This has opened access to formal financial services to millions of people. In the sixth largest ASEAN economies, digital payments reached $806 billion in 2022 and are expected to exceed $1.2 trillion by 2025. This widespread adoption of QR code-based payment is one of the most remarkable developments in Asia. QR codes eliminate the need for expensive hardware and are a convenient alternative to traditional payments. Many Asian countries can leapfrog traditional banking infrastructure by embracing digital solutions without being constrained by legacy systems. These advancements are possible because of strong leadership from central banks in the region. I applaud their clear vision, strategic planning, and commitment to innovation. ADB is actively supporting these efforts through initiatives to implement digital national ID systems and legal entity identifiers, and to support the adoption of the ISO 20022 international messaging standard under the Trade Finance Program and Asian Bond Markets initiatives. ADB also committed to capacity building and private sector collaboration. We are helping regulators and financial institutions share knowledge about navigating digital transformation and developing resilient payment and settlement systems. I also want to highlight my concern over the decline of correspondent banking relationships in the Pacific. This has forced many businesses and individuals to rely upon informal and less secure financial channels. As a result, there are increasing costs and risks, reduced capital flows, and more limited economic opportunities. I believe we can work together, build a more inclusive, resilient, and efficient payment ecosystem. There are promising solutions that are available. For instance, ADB partners with the central banks of Papua New Guinea and Fiji to implement national digital IDs for developing eKYC to improve customer due diligence and reduce costs associated with the AML CFT requirements. I want to encourage this kind of collaboration from governments, central bank, financial institutions, and development partners. Asia and Pacific offers a unique opportunity to spearhead the next phase of global financial innovation, which will make transactions faster, more secure, more efficient. It will also enhance financial inclusion, which is critical for growth and prosperity for all. ADB look forward to working closely with you. Thank you very much indeed.
Thank you, President Kanda, for your very inspiring opening remarks, a motivating way to start our seminar. I would now like to invite to the stage Governor Fabio Panetta, Governor of the Bank of Italy and Chair of the CPMI, to deliver his keynote speech. The Governor has said that payments is the frontier of financial innovation, and the CPMI is at the frontier of payments. Well, I'm certain that the Governor's remarks today will extend that frontier for our discussion further. Thank you. Governor Panetta.
Good morning, everybody. Honorable governors, esteemed speakers, ladies and gentlemen, first allow me to express my sincere gratitude to President Kanda for the thoughtful and inspiring opening remarks, which have laid a strong foundation for today's seminar. Thank you also to all the speakers for accepting the invitation. Many good friends and colleagues that have come from long distance to participate to this seminar. Thank you indeed. It is a pleasure to join all of you at this important gathering. Payments are the backbone of the financial system and the frontier of the financial system, as Tara mentioned. An efficient payment system is crucial for ensuring the secure and timely movement of funds between individuals, businesses, and institutions, both domestically and internationally. The efficiency and reliability of payment systems are often taken for granted and largely go unnoticed until something goes wrong. In recent years, however, there has been growing recognition that payments are not just a technical function, but a vital pillar of financial inclusion, financial stability, monetary sovereignty, and even geopolitics. And we appreciate this in these days. Technological progress has greatly improved the efficiency of domestic payment infrastructures, reducing transaction costs and speeding up execution. However, these gains have scarcely materialized for cross-border payments, which remains slow, expensive, and opaque. The reason is that technology alone is not enough. Harmonized rules and procedures are essential on this front, and making progress on these aspects is more complex. The stakes are high. In 2024, the global cross-border payments market was estimated at over $190 trillion, twice the size of global GDP, and it is projected to surpass 300 trillion, such a big number, you cannot even pronounce it, $300 trillion within the next 5 to 10 years. The G20 and international organizations have recognized the urgency of enhancing payments across borders and have called for action, launching an ambitious roadmap to address these issues. Today, I will reflect on the key steps and motivations behind this initiative, discuss the remaining challenges, and sketch out possible strategies to overcome them. So, first of all, why do we care about cross-border payments? The G20 roadmap sets out key objectives to improve all three segments of cross-border payments: wholesale payments, which are essential for the smooth functioning of the global financial system; retail payments; and remittances, which have a direct impact on individuals' daily lives. Cross-border payments have always predominantly relied on a correspondent banking model. Relying on a chain of intermediaries to complete transactions inevitably makes payments slower, more expensive, and less efficient. To make things worse, the tighter prudential standards and stricter AML-CFT regulations introduced after the financial crisis led to a decline in correspondent banking relationships. Between 2011 and 2022, the number of active correspondent banks fell by 30% globally, with some regions experiencing reductions of nearly 50%. As a result, the network of correspondent banks has become increasingly more concentrated and less competitive, which contributes to persistently high costs and, in extreme cases, limits firms' access to international trade. These inefficiencies have triggered the rise of new technologies such as distributed ledgers and new products such as crypto assets in order to provide a better solution to people's payment needs. But it is a promise that needs to be taken with a pinch of salt. Unbacked crypto assets pose significant risks, including the potential for substantial losses for end users. More importantly, they do not fulfill payment functions as they are highly volatile, lack intrinsic value, and are often under-regulated or entirely unregulated. If properly designed and regulated, so-called stablecoins could instead perform some payments functions. However, the proliferation of stablecoins running on non-interoperable blockchains risks fragmenting the payments landscape and undermining overall efficiency. In addition, regulatory frameworks vary significantly across jurisdictions, and the lack of coordination makes future outcomes difficult to predict. Finally, while stablecoins face the risk of a run like banks, they typically lack some critical safeguards such as access to central bank facilities, deposit insurance, and resolution frameworks. Prohibition is not the answer, though. The only effective response to the emergence of riskier alternatives is to provide retail payment solutions that are efficient, safe, and reliable. How can we do this? Inefficiencies in cross-border payments impose significant social costs on the most vulnerable segments of the population. Remittances often represent the main source of income for many low-income households, and while they may appear modest in the context of total cross-border payments, they are vital for certain economies where they represent a large share of GDP. Low-value remittances may incur disproportionately high fees relative to the amount sent. However, high costs are only part of the problem. Many unbanked individuals and people living in less developed economies lack access to payment services altogether. This forces them to rely on informal, unsecured channels for cross-border payments. In principle, high remittance costs, which effectively resemble a tax on labor income earned abroad, could even discourage workers from relocating and hinder international labor mobility. The Asia-Pacific region is particularly significant in this context, as it is the largest recipient of international remittances worldwide. In 2023, it accounted for 38% of global remittances inflows, amounting to $328 billion. In 2022, remittances to low and middle-income countries in the region matched the volume of foreign direct investments, highlighting their role as a vital financial lifeline for developing economies. Addressing inefficiencies in cross-border payments is an increasingly urgent matter. In a world marked by growing interconnectedness, expanding e-commerce, and rising international travel and migration, the social costs associated with them are likely to increase very fast over time. These are the reasons why the G20 launched its roadmap and set very ambitious quantitative targets for improving cross-border payments. Over the last 5 years, international organizations and standard-setting bodies, such as the Committee on Payments and Market Infrastructures, which I chair, have worked doggedly to advance the roadmap. Most of the planned actions have been completed, and a wide range of infrastructure improvements have already been implemented. Among other initiatives, let me highlight the work done to improve payment system interoperability. The Committee on Payment and Market Infrastructures has developed frameworks to help payment system operators make informed decisions on extending operating hours, expanding access to new participants, and establishing sound governance and oversight arrangements. I should also mention the CPMI's, the Committee on Payment and Market Infrastructures, harmonized ISO 20022 message data requirements. When widely and consistently implemented, this messaging standard can significantly accelerate payment processing, enhance automation, including in AML, CFT controls, and reduce costs. These are real-world improvements that directly benefit users. Even in good times, it would take time for these efforts to translate into tangible improvements for end users, even in good times. The proposed guidance should be properly enforced and widely adopted. Moreover, several challenges continue to hinder progress towards the roadmap's objectives. These include misaligned AML CFT compliance controls and privacy rules, inefficient implementation of capital controls, limited transparency for end users, and insufficient competition in certain market segments. A further complication is that the times are not so good, to put it mildly. Rising geopolitical tensions have turned control over global financial infrastructures into a tool of political leverage. Several economies have moved to strengthen their national strategic autonomy by reinforcing domestic payment infrastructures or developing independent messaging networks. Financial and payment infrastructures have become central to geopolitical dynamics, actively shaping global influence and strategic positioning. As a result, payments are becoming even more fragmented. It is increasingly clear that the roadmap targets are unlikely to be fully met by 2027. But this is not an excuse to scale back our effort, quite the opposite. Improving cross-border payments was a key priority of the Italian G7 presidency in 2024. Our efforts focused on promoting one of the roadmap's main objectives, the creation of bilateral interlinking arrangements between payments systems. This is not the only path forward. An alternative approach could be to establish a single multilateral arrangement with the broadest possible geographic scope. However, its appeal, reducing the number of connections, must be weighted against the significant challenges of defining governance structures and a shared regulatory framework as required for a multilateral platform. A realistic and viable scenario in the near future would be the coexistence of bilateral and multilateral interconnection agreements. A limited number of jurisdictions with strong strategic alignment and deep economic integration could form multilateral agreements, harnessing network effects and effectively creating regional hubs. These hubs could then connect to one another or to individual jurisdictions through simpler bilateral agreements. Let me conclude. The Asian region stands out as a hub of innovation and experimentation, one that we observe with interest and from which we can draw inspiration. The implementation of several bilateral links across the region have effectively addressed cross-border payment inefficiencies in multiple corridors. At the same time, more ambitious longer-term projects are also emerging. This is why I believe today's event will be extremely relevant and fruitful. What is essential is invisible to the eye, said the fox to the little prince in Antoine de Saint-Exupéry's timeless tale. The same can be said of payment systems. When they function well, they go unnoticed, yet when they fail, they are impossible to ignore. Payments do not just transfer money, they move people, businesses, and entire economies. And in a globalized world, when payments stop at borders, progress stops too. Integrating payment systems is not just a matter of improving efficiency. It is a way to improve our lives. And for many, especially the most vulnerable, the impact can be profound. Integration can also be a source of stability. In fact, it is an insurance against political fragmentation. As global financial infrastructures become increasingly interconnected, the cost of geopolitical confrontation rises, and their likelihood is consequently reduced. The challenges ahead are many, but they can be overcome through dialogue and cooperation. Thank you for your attention.
Thank you, Governor Panetta, for your comprehensive and insightful remarks. Following the Governor's valuable perspective, let's now move to our panel discussion. I'm pleased to invite our distinguished panelists on stage. Let's give them a warm welcome. We've got Governor Chia Suray, Jacqueline Loh, Sriyanka Hore, and Jessica Renier. I will move to introductions in just a moment, but let me start with a couple of comments here. Again, it's wonderful to be in Milan. It's a city known for its art, fashion, architecture. As with many other cities in this beautiful country, Milan has a rich history and many cultural attractions around the city. So let me share with you my 13-year-old son's favorite cultural attraction in Milan. It's not the Duomo, it's the Lego store. Now, why do I mention it? Of course, because I highly recommend it. But more importantly, because we can draw a parallel between Legos and cross-border payments. Legos are a very powerful and vivid example of interoperability. Every brick, no matter its size, shape, or color, connects seamlessly with another. My son will also say that it delivers a great user experience. With those colorful little bricks, you can build almost anything. However, while Lego sets typically come with step-by-step instructions to build from scratch, there's no such detailed manual for enhancing cross-border payments. Well, moreover, we're not starting from scratch. Countries have existing domestic infrastructures in place, which, unlike Lego bricks, are often not interoperable with another. Although universal instructions for cross-border payments don't exist, the CPMI work provides valuable guidance to help us navigate the challenge. This reminds me of the LEGO slogan, LEGO, where instructions meet inspiration. Just like with Legos, it's about finding and imagining new ways to connect the pieces based on a solid foundation. As another quote goes, brick by brick, we shape the world. I'm sure our session today adds another important brick to the cross-border payments program. And with that, let me introduce our distinguished panelists, all who have played a pivotal role in payment system reforms and cross-border payment initiatives. First, we have Governor Chea Surey, who served as governor since 2023, following her role as deputy governor. A proponent of financial literacy and women's financial inclusion, she spearheaded its integration into Cambodia's educational system. Notable achievements under her leadership include Bakong, a DLT-based national payment system enabling interoperability among financial providers. Enhancing accessibility and affordability, Cambodia also launched its fast payment system in 2016, further advancing the nation's financial infrastructure. Welcome. Jacqueline Loh is Deputy Managing Director for Corporate Development at the Monetary Authority of Singapore, or MAS. Since joining MAS in 1987, she's held key roles, including Deputy Managing Director for Markets and Development and Assisting Managing Director for Policy, Risk, and Surveillance. Her expertise spans monetary policy, risk management, markets development, and financial technology. Jacqueline also served in MAS's New York office from 1990 to 1994 and received the Public Administration Gold Medal in 2018. Next, Sri Lanka Hore, Managing Director at SWIFT, and is the newly appointed Global Head of Industry Engagement. Previously, she led SWIFT's Market Infrastructure and Standard Service, serving 250-plus market infrastructures and driving key initiatives like ISO 20022. Before SWIFT, she was Global Head of Payment Strategy at Oracle and Chief Technical Architect for IBM India. Finally, Jessica Rainier, Managing Director at the Institute of International Finance. She's the Managing Director over digital finance. She previously served in senior roles in the US Treasury, the White House, and the Federal Reserve. Her expertise spans financial technology, innovation policy, and government oversight. Jessica also worked at JP Morgan, Deloitte Consulting, and the Hoover Institution. So let's begin. I'll be seated. So let's start with Governor Chea. Cambodia has developed extensive experience in interlinking, establishing bilateral links with Laos, Vietnam, Malaysia, and recently signing a Memorandum of Understanding with India's Fast Payment System, or UPI. Can you describe how you selected your partners for interlinking arrangements? Are you considering other links in Asia or perhaps beyond? Over to you.
Thank you, Tara, for the introductions. Maybe I also want to introduce Cambodia to some of you who have not been there or haven't heard about our country. It's a small country in Southeast Asia. So our journey with payment systems started in 2016-17, when at that time we have a very still have a very fragmented financial system. We have banks who are well connected to each other on a bilateral basis or trilateral basis. And then we have the payment service provider, which we regulate as a technology provider, and then we have the microfinance sector. The payment service provider serve the rural people, and the banks serve the more sort of affluent segment of the market. And so then now we end up having the banks serving the higher, sort of more affluent, and then the microfinance and the payment service provider in the rural area. So when we have, and they don't talk to each other, so when we have someone in the province wanting to send money to their children in the city, studying in the city, they would be able to do this, but at a very high cost. Reversely, we have someone in the urban area, a child people working in the urban area and want to send money to their parent in the province, it will also be almost impossible. The cost is so high. And so we thought we have to do something. We have to connect these two, not just on the payment side, but because of this fragmentation, it's created a disconnect between the rich and the poor, the urban and the rural. And so we thought we have to bring them together. And so we started to think about different ways to make these different players interoperable. And one thing that we stumbled on at that time, because Bitcoin was a big thing in 2015, even a bit earlier. And so we wanted to study different technology that can help us do that, but without adding additional burden to the payment service providers or to the microfinance sector. Because under the normal sort of payment connectivity, you can require the payment service provider and microfinance to open a settlement account with the central bank, with the National Clearinghouse, require them to manage their liquidity the same way you would require banks to manage their liquidities, because otherwise, if somebody failed to come up with a liquidity, the whole national payment system fell. And in these instances, it would prove sort of unproductive, because we created different tiers of regulation for these service providers because they serve the lower segment of the market, and we don't want to add additional costs in terms of regulatory compliance. And so we have to think of ways where we can bring them together, but without this additional cost. And so blockchain technology came to our mind, and the things that we like about blockchain technology, and we were sort of criticized or questioned why a small country like Cambodia go all the way to use blockchain technology as a national payment system when the bigger ones are just studying about it. And so we thought we don't want, and this to your point, there's no playbook, there's no instructions on how to do it. It depends on your own situations. And what we love about blockchain is the peer-to-peer settlement of this. And so what we're able to do is we allow payment service providers to connect with banks, to connect with microfinance, without them having to open a settlement account at the National Clearinghouse. So it's done directly. As long as their client has money, they can send money. So this on a domestic sort of front, it was fantastic. We created this interoperability. And then we came about to so this is on remittance. And then we thought, now we have so many players, everyone has their own QR code at the cash counter. Sometimes we have about 10 QR codes because banks have their own proprietary QR code, and we thought this is not possible going forward. So we then, 2 years later, we created a standardized QR code where there's only one QR code for all the players. And that was the easy way to combine the QR code, but also to help us connect to the cross-border. Now come to the questions that you asked on cross-border. Why cross-border? Cross-border was something that came about as an issue of independence, to Governor Panetta points. Why is that? Because Cambodia is a country which is 85% dollarized. And so only 15% of the economy is in local currency, 85% is in US dollar. The pros and cons of this, it will require different panel sessions. But what we wanted was to promote the use of local currency. And to do that, cross-border connections was one way to do it. So when we work with our partners, so the country that we want to connect with, we require Cambodian users to open a local currency account for them to be able to go to Thailand and make payment to the QR merchant in Thailand. They have to open a local currency account. Because if we don't require this, they won't open a local currency account, and we can't mandate them because it's dual currency things, and if we mandate them and we impose it on them, there is to be capital flight and big sort of commotion. So we said, okay, we will not make it compulsory for you to open a local currency account, but if you want to benefit of our effort to connect with a different country, you have to open a local currency account in order to transact. And so they have, then now we have more saving in local currency account for Thai tourists or Laos tourists or Vietnam tourists to come to Cambodia and make payment from their account to our Cambodian QR merchant. The QR merchant have to open their account, they have to accept payment in local currency. And so with this, we have an increased usage of local currency. So now in the electronic payment system, we have 50% local currency in terms of volume, 50% US dollar. In terms of value, it's still low, so 30% local currency, 70% US dollar. So that's in a way to promote this cross-border and also the independence and the use of local currency. At the moment, our QR, in terms of our payment development, we reached about 8.5 million users. This is for a population of 17 million. So you can imagine almost half of the adult population, almost all the adult population have a QR account and make payment. In terms of transaction, it's 3 times of our GDP. How we select our partners, it really doesn't matter. Whoever wants to connect with us, we will connect. So far, we have Thailand, Laos, Vietnam, Malaysia, and we have an MOU with Philippines and with Indonesia. We try to work with the Singapore payment network as well. We have also connected to China with WeChat and Alipay Plus. We're now working with Japan, and we're willing to expand it to wherever they're willing to cooperate. Even countries like Japan and South Korea, we have some connection with South Korea. Japan and South Korea is interesting because they're card-based country. Everyone uses card. But we still push through the connectivity because we thought maybe in the future when the Korean and the Japanese come to Cambodia, they can use our QR payment.
Thank you so much, Governor Chia. It is always fascinating to hear how Cambodia has overcome and addressed some of its challenges. Fascinating. Let me turn next to Jacqueline Loh. Singapore has been a pioneer in establishing interlinking arrangements and has gained extensive experience with both bilateral and multilateral links with other countries. So can you please tell us about Singapore's interlinking journey, including the motivations and success factors?
Thank you, Tara. So before I start talking about our interlinking journey, I thought I would share a bit on our domestic electronic payments journey, which actually has become a very important foundation for cross-border linkages. I think over the years, we all know that technological advancements have significantly transformed the payments infrastructure landscape. So recognizing that, we set about, for a few years now, transforming Singapore into an e-payment society, one where innovation in e-payments is pervasive. We offer consumers maximum convenience, maximum confidence in using electronic payments, also helping businesses to enhance productivity through integrating digital payments with the rest of their with the rest of their processes, and encouraging electronic payments that are fast, secure, cost-effective. So we set about that as our objective. We were quite actually fortunate in this journey because we had started earlier, actually in 2014. We set up our FAST, which is our infrastructure for fast and secure transfers. This is an account-to-account, near-instant, 24/7 payment rail, which was one of the first. Singapore was amongst one of the first to introduce 24/7 near-instant payments. So FAST was set up in 2014, and we then built upon this with what we call Pay Now in 2017, which allows payments to be made riding on FAST, just using a mobile number or a national identification number. This was primarily for consumers. Merchants were brought on board in 2018, where payments to merchants can ride on FAST just using an identification number for merchants. In 2021, we further enhanced interoperability between bank accounts and wallets by opening up FAST and Pay Now to non-bank financial institutions and e-wallets, really to expand the number of players, encourage innovation in our payments landscape. So besides, instant payment linkages, we have also encouraged usage of QR codes. We recognize the risk of fragmentation and proliferation, so we introduced the SGQR, Singapore Quick Response Code. This is a unified payment app where consumers' mobile banking and banking apps can all be used on a unified QR code. So that is kind of the common infrastructure layer that we have set about building over the years. And today, more than 90% of Singapore residents and businesses are registered via PayNow, and more than 98% of our merchants are registered using SGQR. So that's the domestic payments landscape. And when we recognize that, even as we aim towards greater interoperability, greater efficiency in our domestic payments, we needed to look beyond Singapore. We needed to look towards new frontiers, as was mentioned earlier. And we recognize that as more people travel overseas, more people work overseas, and as businesses look to unlock opportunities through international trade, cross-border payments needed to keep up, needed to facilitate this development. And in Singapore, with over 2 trillion in trade in goods and services, and a large migrant population making remittances, it was, more than just a payment story. It was actually an economic and social imperative for us. So that's our motivation. And our journey has really, on cross-border payment linkages, has taken various turns. For us, our journey has started off very much on bilateral linkages, and now we're working on multilateral linkages. So let me start very briefly on the bilateral front. This was actually a deliberate phased approach, a very important learning opportunity for us. We started off in 2019, actually, between Singapore and Thailand as partners in linking our instant payment systems, PayNow and PromptPay. So after 3 years of very hard work between Singapore and Thailand, we are very glad to see our instant payment systems linkage launch. And that actually set the stage for similar linkages between Singapore and India, and Singapore and Malaysia's Do It Now in 2023. At the same time, that's instant payment linkages. We recognize that there are actually many payment channels, different modes, and so we worked with and supported industry to develop and launch cross-border QR linkages with China, with Indonesia, Malaysia, and Thailand. And these QR linkages have really significantly transformed how tourists pay businesses using their existing mobile banking apps. And these, whether it's instant payment or QR payment linkages, have really unlocked safe, fast, secure cross-border payments across our regions, and really, meeting multiple use cases for SMEs and merchants, individuals, whether you're working or you're tourists. So, for us taking a step back, we're very encouraged to see really increased interest and ambition on enhancing cross-border payments, both regionally as well as internationally. And just a quick word on ASEAN, encouraging cross-border payments is actually a key focus area to support ASEAN's digital integration and financial inclusion. So in 2022, the central banks of Indonesia, Malaysia, Thailand, Philippines, Singapore, we set about signing a memorandum of understanding on regional payments connectivity. And more recently, Vietnam, Brunei, Laos, Cambodia have also signed up. And this really aims to make cross-border payments faster, cheaper, more transparent. And I think it's very encouraging to see that after the signing of this regional payments connectivity, we have seen actually 18 linkages within ASEAN, whether it's instant payment linkages or QR linkages, and with more to come. And by promoting these payments, again, I think this is a very important backbone to support trade and support businesses in the ASEAN region. And finally, looking ahead, looking beyond bilateral to multilateral linkages, we are working very closely with the BIS Innovation Hub on a Project Nexus, and hope to be able to shape the global payments landscape. And the objective there is really to have more efficient, resilient, interoperable and inclusive global payment systems, very much working towards meeting the G20 payments initiatives. I'll take a stop there. Thank you.
Thank you. Thank you, Jacqueline. There's so many exciting innovations going on in Singapore. And to Governor Panetta's point, you're pursuing not just bilateral, but multilateral, regional. It's just, we have so much to learn also from Singapore. So let's move now to Shriyanka from SWIFT. SWIFT has a unique global perspective on payment infrastructures. It's been instrumental in advancing interoperability and standardization worldwide. So can you tell us about the role that SWIFT plays in interlinking initiatives, Have you observed material improvements based on your data in the corridors that you're most focused on?
Thank you, Tara, for the question. Maybe a little bit about SWIFT as well. SWIFT is probably the first instance of a global public digital infrastructure, coming even before the days of the internet, bringing together banks in distributed markets into a centralized trust network. Often known as the correspondent banking network or the payments network, we are neither. We are agnostic to the business models that underlie the movement of money. In fact, SWIFT powers global value chains to the tune of the world's GDP, moving over the network every 3 days. That's the sheer amount of trade that happens in the world. And SWIFT is an information exchange network that powers over 200 plus market infrastructures that are in payments, securities, FX, and trade. So coming to the point of interoperability, right? Being a global digital public infrastructure, we do not stand for commercializing of products. It is really about insourcing problems and building community success stories, co-creating values that will make payments more inclusive, impactful, and we've been on this relentless journey of instant frictionless payments since 2017, playing different roles in enabling interoperability, from becoming the standard setter, convening market practices, working closely with the Committee on Payments and Market Infrastructures to ensure standardization, regulatory harmonization, as well as resilience of the international financial architecture. We've stood through that trusted partner through cycles of globalization, fragmentation, economic upturns, downturns, and unprecedented pace of digitization and technological decoupling in a way as well. And looking into the future, we see multiple digital islands, interlinked payment systems, token economies, public-private ledgers, all of this coexisting. And SWIFT has a role to play in enabling interoperability, keeping that trust alive, and at the end of the day, impacting end users like us to make payments through any channel. And in that journey, we've evolved from a point-to-point messaging network to becoming an end-to-end orchestrator of transactions. Today, we can enable not just account-to-account flows between 4 billion accounts in 200 countries, in 153 currencies with 40,000 unique routes, but also trace the entire movement of a payment between the first miles that originate in domestic retail payment systems or settle in RTGSs or vice versa. So the ability to chain through different first and last miles, including partnerships with wallet providers, because as we know, correspondent banking has evolved and there has been exits of correspondent banks from, say, the Pacific Islands. So enabling partnerships with wallet providers allows us to make account-to-wallet payments in certain corridors. Specifically on interlinking, in 2017, we launched GPI Instant, which was really about evaluating the last mile on a faster payment system. But at that point, there weren't so many faster payment systems in the world. Today, we have 60 plus, so there is momentum, there is scale. We also started the IP plus market practice building in terms of standards. However, because of the limited scale at that point, it wasn't very, understood by the banks, and there was little motivations for them to switch the last mile to a faster payment system. As we've evolved the tracking capabilities, today we see from the tracker the exact way. It's become a source of truth for measuring speed and reporting to the G20 on the speed statistics as well. So a little bit of insights into that. End-to-end speed, which means the point the payment is originated by an end user to the point where the end beneficiary receives credit, is the end-to-end payment calculation, right? And that, as per the G20 speed metrics, 75% of payments should settle or be credited within 1 hour. The reality is 90% of payments on SWIFT reach the end beneficiary, reach the beneficiary country in less than 1 hour, two-thirds in less than 5 minutes or even like a minute. However, the credit to the beneficiary is not received. Only 43% of payments get credited to the end beneficiary. So why the lag from 90% to 43%? We went in and did a deep analysis, and a few things came out, right? So there were 3 patterns we observed across the 40 top receiving corridors on SWIFT, which account for almost 80% of transactions on SWIFT. Funny enough, only 3 countries are above 75%, and the targets are for 2027. The medium speed countries and the high-speed countries have an efficient last mile, a 24/7 RTGS, or a retail payment system, which is 24/7 instant and can move cross-border data, along with high degree of automation in the banks itself. The economies are advanced. The medium zone countries, here there is 1 or 2 big banks, which are the key receivers in that country, who then forward it on to the end beneficiary through the last mile infrastructure. And there is lack of automation. Sometimes it's the risk. So the payment has come in, but there is a local obligation based on regulatory guidelines which says credit on confirmation of credit. So they will wait till the next day to see the credit in the statement and then release the payment. There are strict screening guidelines on AML, CTF, and therefore the payment is not moved until you confirm with the receiving beneficiary the purpose of the payment, right? And all of these have come into being because of FX reserves, FX controls, capital controls, and the speed itself is impacted because of time zone differences. Asia specifically is at a disadvantage because when funds move from the west to the east, by that time, the RTGS has closed. So the limited hours of RTGSs are a big problem when you look at the speed. And last but not the least, we're working also with the banks, right, to improve their STP to enable them to switch from the last mile on an RTGS to a faster payment system. So interlinking is very visible when you look at the tracker because we can see the first mile originating in a certain market infrastructure where the first mile problems are very different. There are new actors coming in and the cost is elevated, right? Newer channel costs, partnering, acquiring costs for the payment acquirers, and then, of course, the intermediaries. But funny enough, everybody thinks it's the intermediaries who add up cost, but 86% of these payments have 0 intermediaries or have 1 intermediary. So it's not really the float that is the cost. It is the acquiring mile, and the speed is the last mile. I'll stop there. But just in terms of interlinking, we've been a solid partner for the BIS Innovation Hubs as Nexus has evolved as a multilateral project. Bilateral links, we experimented with the TIPS in Buna as one of the first connectivity bridges between 2 market infrastructures, and we continue to be that trusted partner as these networks evolve.
Certainly are a trusted partner. Thanks for your comments. And I have to say, you've piqued my interest now about those 3 fast countries. I don't know about you, but I sure would like to know. Let's move to Jessica. So Jessica, you're a representative of the industry that ultimately runs their services on these payment rails. The idea that building rails and they will come, so to speak, does not always hold true for payments, particularly the case for fast payments. So can you discuss a little bit about the incentives for payment service providers to join fast payment systems, and further to that decision for taking a step further and thinking about interlinking arrangements for cross-border payments? Over to you, Jessica.
Sure, and I was actually just listening to Shriyanka and thinking that she had given a number of very good examples of things that I'm about to touch on at a higher level of kind of an overall framework of thinking about whether, what's needed in order to actually make a system attractive to participate in. And I think the biggest thing, to Tara's point, kind of building a system and they will come, it gets to a question of adoption, right? How are you going to get entities to adopt use of a system? And for sure, the number one thing in the success of a system, I would say, from an industry standpoint, is ensuring that there's actually broad adoption to use of that system. Because if the entities that you intend to interact with aren't using the system, then it doesn't matter a whole lot that it exists, right? So it's kind of just an initial challenge of getting over the hurdle to get a sufficient number of both receivers and senders. Because everybody, if firms or financial institutions all sign up to use a system, but they're signing all up as a receiver, but not as a sender of funds, then you're missing half of the equation, right? I think there are kind of three things that I'd pull on, and I actually wanted to reference. These may be familiar to some of you because a kind of solid advisory group once came up with a few of these standards, but they still significantly apply. So one is the importance of mutual confidence among providers in the safety of the products across the system. I think that particularly is key today as we're thinking about and challenged by fraud increasingly. And questions of how safe and secure our funds transfer is, and how confident we can be in it with increasing vectors of attack. So one is that mutual confidence. Two are mechanisms for interoperability that and enabling products to identify one another and to communicate and complete transactions. So here I think of things that make it easy for a financial institution to actually use the system. For instance, directories to link individuals' accounts with routing information, or ability to have requests for payment capabilities and tools for payment inquiries. Things that just enable just a more efficient operating system in the first place. These are sort of common sense. But oftentimes, I would see in projects that we see being pursued, some of these kinds of functionalities aren't necessarily included in them. And then I think it's not surprising then that adoption may be challenged in those cases, because there are clearly things that financial institutions would look for. And then third would be a framework for institutional collaboration. So I think an appropriate framework for an advisory or governance structure, which I know the CPMI has certainly consulted on at points around governance structures for faster payment systems, interlinking, and others, and the importance of that. One of the things that I think industry has identified about those governance structures is the importance of neutrality of the operators and different entities, and that structure to ensure any limitation of conflicts of interest. And I think this particularly comes into play in terms of the cooperation and collaboration between public and private sector, ensuring that the scope of those roles on either the private side or on the public side doesn't create an inherent conflict of interest that crowds out or causes competition between the two, rather than just focusing on an overall system that benefits the global economy. I think other items that certainly come up, of course, Shriyanka brought on the issues of timelines and availability and 24/7 access, certainly at the top of the list, and the liquidity to actually maintain those effective instantaneous transfers, even during time lags or non-banking hours. Lastly, I would say really considering what value-added services are enabled as a result of a system. And one of the things that I want to raise at this point is the reality that there are going to be many different there are going to be multiple different technologies, multiple sets of infrastructure for movement of money going forward, and that is only growing. with innovation and tokenization, with stable coins, with different kind of participants and payment services providers, and then banks. All of these different things are going to exist in a multi-solution future. That is guaranteed. And so amongst that, in order to be the most attractive solution for sending money, you really need to hit all of those different things, not just one or another, because there will be competition among all of those different solutions, and some will be better fit for various use cases and others will be less well fit for those use cases. But there definitely will be those things. And if it does not solve all of those issues and enable value, additional value-added services, then I think it will be hard to compete with some of the other newer technological solutions.
Thanks very much, Jessica. I think you've laid out more challenges than solutions here. Okay, so let's do one more round of questions. In the interest of time, let's try and keep our answers to about a couple of minutes. I'm going to start with Sriyanka, and let's talk a little bit about ISO 20022 adoption, how it can successfully facilitate interlinking, or are there more urgent challenges? Sriyanka?
Thank you. I think the adoption of ISO 20022 is symbolic of a couple of things. First and foremost, SWIFT moving to ISO 20022 is a move from proprietary to open standards. It forms the foundation for interoperability between existing cross-border networks, and Jessica, to your point, the networks of the future which will span across ledgers and existing traditional financial market infrastructures. In terms of the ISO 20022 adoption, it unlocks huge potential. Banks see it as a way to commercially differentiate offerings based on the rich data, understand the customer better, powered analytics, intelligent, smarter product offerings, and so on. Market infrastructures can benefit from a solid foundation of high-speed transactions on their network and eliminate friction, because now we can see the transaction movement, but also understand the purpose behind it. The screening, the way to carry out post-transaction corrections, exceptions, investigations can knock out friction to the tune of 1.6 billion euros for the industry. And for interlinking specifically, I think for a market infrastructure to adopt ISO 20022, it unlocks huge possibilities. First and foremost, to play that critical last mile when there is a lack of RTGS operating hours. It could stand in. It could be a failover strategy. It could be a complementing strategy of the last mile. It could also then go on to enable a market infrastructure pursue different interlinking strategies, bilaterals with a few trade corridors, and participation in multiple multilateral corridors. So it has the huge potential that unlocks the way interoperability is designed by an individual market. Also, the IP Plus standards is a way to harmonize this adoption. It is not a one-time adoption. It is also about continuous evaluation and evolution of standards. It needs to keep in mind cross-border standards, high-value payments markets, how they adopt HVPS Plus, which is the market standard, CVPR Plus, which is the market standard that we've designed and adopted in SWIFT. And in November 2025, 11,500 members on the SWIFT network at one shot will make the big leap from proprietary SWIFT standards, taking on ISO 20022 for cross-border payments. So the potential is huge because we've already done the groundwork to bring these market actors who participate in the market infrastructures and become ISO 20022 enabled. Their banking infrastructure, their back offices are now ISO enabled. It is now for the market infrastructures to catch onto that momentum and open up, it unlocks potential to open up the rails to cross-border payments as well simultaneously. So I'll stop there. I'll make it short for you, Tara.
Thank you, Sriyanka. So let me move next to Jacqueline. I'd like to hear a little bit more about MAS's experience, particularly What have been some of the most significant hurdles in your journey, and how have you overcome them?
You know, I think even though a lot of progress has been made globally on, making domestic payments electronic, faster, safer, I think on the cross-border front, we know that progress has not kept up. And a large amount of cross-border banking still relies on correspondent banking, costly, not transparent, opaque, and can be slow. So our view has been, working on cross-border linkages, bilateral, and leveraging on the learning there, on new bilateral linkages as well as on multilateral linkages. So that's been our approach. And importantly for us, our first bilateral linkage with Thailand between PayNow and PromptPay was a very important pathfinder for us and a blueprint upon which we took in lessons learned, developed more bilateral linkages, as well as brought it to the multilateral linkage discussion. So allow me to share some of the challenges we actually encountered in the PayNow PromptPay linkage work over 3 years, and it spans across 3 fronts. I think firstly, technical challenges. Because we are connecting different domestic payment systems, of course, technology challenges arose, and we had to think hard about how to resolve them. One key challenge was something very seemingly innocent, called a 5-second differential between system turnaround times. So there was a 5-second difference between that of Singapore and that of Thailand. So who would know that, or who would think that this 5-second difference would result in timeouts, messages to customers that your payments have not been made, impacting confidence and so forth. So we had to be very creative and think through solutions. So what was introduced was an asynchronous flow to bridge this gap, where a new confirmation was introduced, which indicated that a transfer has been relayed, and that in turn allowed banks in Singapore to inform their customers that their payment is on its way. So this measure, seemingly small, actually went a long mile to improving confidence. And this was very important because we had to make sure that the instant payment systems, which actually serves the domestic needs, needed to function as normal, needed to function on a BAU basis, so we couldn't make too much structural changes. So small changes like that, innovations, help make the transfers a lot smoother. I think secondly, both sides found out that there were significant difference in country practices and customs, and that in the end resulted, I think, in significant end-to-end integration testing. So just a few examples, it actually emerged that the different countries actually had different practices in testing methodologies as well as approaches. We think that testing methodology should be quite standardized. There were actually differences. And we had different approaches towards treatment of and onward processing of transactions, which actually mean that both sides had to think hard about exception cases and test end to end to make sure that the exception cases could be properly treated in a cross-border perspective. Many permutations were developed and compiled by both sides, and that actually required, I think, a lot more time for testing and confidence and reliability. We also found out that the use of English as a common language introduced very unexpected issues, which we had to resolve along the way creatively. We found that different language norms, different naming conventions were also frictions along the way, which we had to adjust from a cross-border perspective. I think thirdly and very importantly, we had to harmonize and find solutions to align with each other's laws and regulations, because those must be met, even on a cross-border basis. So transaction flows were mapped out meticulously, and regulators on both sides engaged to ensure ourselves and give confidence that compliance with AML and screening needs, for example, would continue to be maintained in a cross-border arena. And importantly, we also had to introduce new systems and processes, such as real-time name screening modules to ensure that all lists were checked through for both sender and recipient prior to the payout of funds on these linkages. So I think these were challenges that both sides had to work through. And how did we do so? I think fundamentally for us to be able to solve these challenges, big and small, was, I think, 2 important things. One is a joint governance structure, co-led by both central banks, I think working very closely with our respective payment system operators and industry participants. And it was this sort of co-led governance structure that allowed us to really put very difficult issues on the table and find breakthroughs. I think very importantly, the close collaboration and vision across both ecosystems really to have a breakthrough, a bilateral linkage, which will allow faster, more cost-effective, secure, instant payments. This shared vision was very important that allowed both sides, I think, to take challenges in our stride, find innovative solutions, come to the table, have very open discussions, and to make progress. I think those two are very important learning lessons from our part, and that we take away with us from a Singapore perspective to other bilateral linkages, as well as to the multilateral linkage table.
Thanks, Jacqueline. It's amazing how such small differences can have such a large impact. So let's turn to Jessica. Divergent regulatory frameworks often pose challenges to cross-border payments. Can you tell us what you think could help mitigate some of these challenges?
Sure. Tough question, though, because there are always going to be divergent regulatory and legal frameworks. I actually occasionally see pursuit of projects or innovation that kind of wishes away these issues and says, well, all else equal, right? We'll just assume a consistent legal framework, which is just never the case. And so I sometimes caution against some of those projects, spending a lot of time on them, not considering that those differences are going to exist, and then kind of seeing a magical solution to things that the private sector may have already tried, but is running into the last mile issues, I think, that Shriyanka addressed. I think one of the questions also, though, or the way that we ask the question, I think some of the things that can be addressed actually do require looking at certain decisions that are causing the regulatory framework to be different. So I think one of a distinction I would make is to look at an issue and say, is this an interoperability play that we need to just deal with, and it's going to be a question of how do we make this interoperable because the frameworks are not going to allow harmonization, and then, or is this a harmonization play, right? There are opportunities to harmonize things and opportunities to figure out where interoperability is needed, where harmonization is just not realistic. And those two things need to be identified correctly and then pursued appropriately, given those realities. I think a few aspects. There's certainly questions, I think, from industry that they would love to do more research around the actual need or justification for various exchange and capital controls that are generally estimated to contribute greatly to the costs, particularly in the region. Certainly understanding that for various economic reasons they may be in place, but just to challenge what are in fact the pros versus the cons and the cost of those various controls, and are they in fact continue to be justified, and what is their impact long term on payments. I think other questions certainly have been raised around, we hear sometimes the cost associated with FATF gray listing of various countries. However, we recognize that there's a very important role that the FATF plays, and ensuring security and safety of payments is critical. And I think just ensuring that the official sector is then looking at the fact that their country has been rated in a particular way and is gray listed, and just working to address those issues as swiftly as possible, recognizing that that may add to the cost of payments is something significant. But other things that I think that we'd be really excited to consider and look at, and I know that both the FSB and CPMI are doing great work on these questions, are around global data standards, other data frameworks that would help limit increases in kind of a trend toward data localization, or overcome challenges presented by various jurisdictions' choice to pursue localized data approaches that do otherwise hamper cross-border payments. It's certainly increase the cost of them overall. I think additional research around clarification of roles and responsibilities of various PSPs in what are now modern payment chains. Shriyanka brought up just different players that are coming into the system, the need to onboard them, how they interact with each other, and that driving some of the cost, certainly. And I think that there's some work that we could do to just clarify what the roles and responsibilities are, and that risk is kind of broadly attributed or spread across the payment chain as opposed to concentrated on any one entity as more are included. And then I think other research that would be very interesting to do is around the potential for cross-border repatriation of funds. I think is something that would be interesting to look into. And then the ability to look into where we could improve the ability of PSPs to place reliance checks on others that have comparable kind of frameworks for doing so. All in there.
Thanks, Jessica. And we'll close the panel with a question to Governor Chia. Can you tell us a little bit about your journey at the National Bank of Cambodia on financial inclusion, payments digitalization, and enhanced cross-border payments, and how can it improve the lives, or how has it improved the lives of Cambodians?
My answer is going to be a bit over the places because I have a note prepared, but I couldn't download it. So much for innovation and digitalization. First lesson learned. I want on inclusions. I want to say something about the experience in Cambodia and why is it that QR code has been able to pick up so fast. We have about 4.5 million QR code accepting points versus 50,000 card accepting points. So there's more people accepting QR code than cards. And the reason is because it is very expensive for merchant to accept card. There's so many fees, MDR rate, interchange rate, whatever rate, that end up for the smaller segment, the lower sort of merchant, they would just say, I don't want to bother with cards, I would just take cash. The problem with cash also is that it is very expensive to handle because you have to actually carry it to a bank. But also because now with all the AML rules, etc., it's also very difficult to deposit above a certain amount of cash at the bank. So this is one challenge for us to think about when we design our payment system. In terms of cross-border, we have been, so when I spoke about this cross-border interoperability, this is only about the payment. The remittance part is actually the most sticking point, and we have not been able to do that with any country yet. I think everyone wants to put a hold on this because of XY reason. We feel that maybe a bit of background on why I wanted to promote so much this remittance within the country or across the border is it's more personal. When I adopted my younger son, who was born from a migrant worker who was raped, her story was that she worked in the urban area wanting to send money to her family. And because of the cost of the remittance, she couldn't send by a smaller amount. She had to save enough to send in bulk. Then she would save on the remittance cost. And when she sent the money to her family members, she sent it to her mother. The father was an alcoholic, so he would beat the mother for the money. The brother was a drug addict. He would also beat the mother for the money. And it ended up the money was completely misused. And when she fell sick and she could no longer work and she go home, the money was not there. The house was still dilapidated. There's nothing that was improved in her living standard. And so she got very depressed and so completely go into depressions, and whatever happened next, she got raped and she gave birth to my son. And when I adopted my son, I make a promise to myself that I want to live these kind of people. I want to improve their life. I want to be able to make them be able to send money whenever they need to send money. For instance, if they need to pay for the builder, if they want to renovate the house, then she can send the money to the builder without having to go through an intermediary, a family intermediary. If she needs to send money to the school, then she'll be able to send money to school without having to wait and accumulate the big amount before sending the money to benefit the lower cost. It should be low in the first place. And so I am able to do this domestically, but I cannot do it internationally yet. There's still a lot of cost involved. Of course, it has lowered since then. I met with your colleague from SWIFT, who was asking me about these bilateral cooperations, and I said, do you feel threatened by these bilateral cooperations? And he was laughing, and I said, well, don't feel threatened, because even though this cross-border payment happens on the front end, so for the user, it's easier, but in the back end, the settlement between banks is still done through SWIFT and the correspondence bank. And for correspondence banking, it is still very challenging for a small country like Cambodia. We were in a gray list a few years before last year. We were now out of the gray list last year, but it still haunts us. So for Cambodian bank to try to find a correspondence bank, there are not only so many requirements, but the cost is also higher, because the correspondence bank compliance require more due diligence and so on and so forth. And in the end, this is bought by the people, the very people you all want to include. And so my sort of request to any standard setting bodies or to the regulators is that when you set standards, when you set rules, please think of the people on the bottom, how you can include them. Because, of course, you try to limit many things, put in so many rules to catch the bad players, but in the end, you're punishing the good one. And this is, I hope that we can rethink about our regulations and our rule differently, so we can have a more inclusive world and not just complying for the sake of complying.
Thank you. Thank you, Governor Chia, for that very emotional, personal story. And it points back to Governor Panetta's remarks that, we're not here just to find the lowest cost, period, end of story, but actually to try and help the most vulnerable populations. Well, with that, let's give our panelists a warm round of applause. And you can exit this way. All right, so we're nearing the end of our session. Thank you very, very much to our panelists for this engaging discussion. So let's please welcome to the stage Chang Young-ri, Governor of the Bank of Korea, for his closing remarks. Governor Ri.
Thank you, Tara, and distinguished guests. I'm honored to be here, and let me first express my sincere appreciation to everyone who made this seminar insightful, including Governor Panetta, President Kanda, and all our distinguished and impressive all-female panel. And the last remark by Governor's chair, shows the importance of having female leaders in this area. I will not attempt to summarize today's rich discussion. Instead, I will highlight a few points about the development of the fast payment system in ASEAN, which issue I know better. First, we have seen notable progress in interlinking interlinking fast payment systems among ASEAN countries, especially through QR code-based mobile wallet payments, even though ASEAN is one of the most diverse regions in the world. This progress has, as discussed today, produced real-world benefits, more efficient remittance for migrant workers, greater trade opportunities for small businesses, and the boost in tourism. The message from the ASEAN's experience is very clear. Payment system integration is not about achieving uniformity. It is about enabling interoperability, and the cooperation is possible even from very different starting points. A natural question follows from this experience. Can the ASEAN's success story be applied easily to other countries or regions? I think the answer seems to be both yes and no. I remember when Governor Chea visited Seoul in 2023, she asked whether Korean bank could link to Cambodia Backhoe network to reduce remittance costs for the Cambodian workers in Korea. And as she explained here, after consulting our bank, we conclude that unfortunately that viable business cases are hard to develop at this moment. It's not because of Cambodia's problem, but it's mostly because of our problem. Because Korea already have a fully operational credit card network, and bank has little incentive to invest in separate QR payment infrastructure. Believe me, it's getting better. Once we develop QR system uniform, probably we can talk this issue again. This contrasts with the ASEAN and China experience, where jurisdictions leapfrogged credit card usage and adopt QR system directly. The second issue is the given limited bilateral trade and migration volumes, banks are very reluctant to act as a market maker for small and liquid currencies. So this issue is non-technical, and still it has a lot of implication for the development of the ASEAN system. Instead of banks, several fintech companies showed interest in cross-border remittance businesses because they are willing to carry the FX risk on their own books. This reality reminds us one of the core messages from today's discussion. Building infrastructure and investing in technical readiness are not enough. Developing viable country-specific business models and creating an enabling environment are equally essential. The second issue I want to just address is the scalability of what currently Singapore and ASEAN countries are doing. With today's modest but stable transaction volume among ASEAN countries, it is not hard to find a private bank to serve as a market maker, as I just mentioned, providing liquidity and bearing FX risk on 24/7 days basis. Eventually, however, if the volumes rise sharply, or if the system begins to handle large value business payments, trading small illiquid currencies will become too costly. In fast payments, in such currencies require large liquidity buffers because providers cannot easily source them in the market. To manage that risk, bank or the payment service providers may need to cap the size of the direct conversions, or large trades still need to be intermediates through the major vehicle currencies. So I'm not downplaying the achievement of the Asian countries that have developed. Rather, I want to underscore some potential bottlenecks in scaling up this system. Because whatever the technology you develop, still somebody has to bear the FX risk for these illiquid currencies. And if the volume becomes too large, the FX risk becomes too large. If the volume is too small, there's no business interest. So now looks like there is some saddle point path where this system can develop. So in the bottom line, I think current ASEAN's the interlinkage system can be used for the small transactions efficiently, especially for remittance payment. But whether we can actually develop this into a more major cross-border transaction system, I have to see how we can handle this FX risk issues more seriously. So I think given the time constraint, I may not go into the deeper level, but as for some remark by Shriyanka and Jessica about the timing, And Jessica didn't mention the Agora project that we are currently doing with IIF. And the main reason why the speed has slowed down in our country case is because Korea has a capital control. And in implementing capital control, lion's share of our transactions are still done by manually. And that will definitely slow down the, our input to the automation process. And also in a Agora project, Korea is the only one country which has a capital control among 6 currency area participants. And we will try hard to see and review whether some of our regulation need to change in order to be a part of this global platform. And I hope that our experience can later serve as a benchmark for other emerging markets with capital controls. There are many other issues, but I will stop here given the time constraint. And we all look forward to ASEAN's continued ability to leapfrog technologies and foster inclusive innovation in reshaping the global payment network. And also my thanks again for the Bank of Italy and the ADB for organizing this excellent seminar. Thank you very much.
Thank you, Governor Rhee, for your closing remarks and your perspectives on the ASEAN region. Well, we're deeply grateful to our distinguished speakers, all of you, for your valuable contributions today. And thank you very much to our participants for joining us. So with that, the seminar is now formally concluded. Enjoy the remainder of the ADB annual meeting, and don't forget the Lego store. Thank you.